Welcome. In this video, Zbcn coin has published a new roadmap. What will the price do? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
In a financial asset chart, the term downtrend refers to a structure that emerges when the price continuously forms lower highs and lower lows over a certain period of time. This structure shows that sellers hold control in the market while buyers remain weak. The line of the downtrend is usually determined by connecting the price's peak points. As long as the price remains below this line, sellers are the dominant force in the market, and the downtrend is expected to continue. However, if at some point the price manages to break this downtrend line, that is the moment when a different psychological and technical phase begins. Because once the trend is broken, the balance of power in the market starts to shift. This change becomes a signal of a new move in the eyes of investors. Breaking a downtrend may look like simply moving above a line, but in fact, it carries a much deeper meaning. The trend line is like a strong barrier in investors' minds. Every time the price approaches that line, selling pressure appears and the price turns downward again. That is why the line is perceived as an unbreakable boundary. But one day, the price breaks through this boundary upward, and at that moment, all perceptions change. The period dominated by sellers gives way to a period where buyers gain strength. When investors see this breakout, they think the decline might be over, an uptrend may be starting. That thought alone triggers a wave of buying. Thus, once the price breaks the downtrend, the first upward move begins. The most important feature of trend breakouts is that they create a psychological threshold. When people see the price in a downtrend for a long time, they lose hope. This prevents new money from entering the market. But the breakout moment breaks this hopelessness. Many investors think the moment we've been waiting for has come and start buying. In addition, those who previously bet on the decline are forced to close their positions when they see the trend has been broken. This creates buying pressure in the market. Buyers increase, sellers decrease, and the price quickly moves upward. That is why breaking the downtrend is considered the start of a move. We can also explain this process with a bow analogy. During the downtrend, the price is like a bow being pushed downward. With each new low and new high being lower, the price keeps getting compressed. But this compression cannot continue forever. At some point, buyers step in, the price presses against the trend line, and when the breakout occurs, that bow is released. Just as a released bowstring shoots forward quickly, the price also makes a rapid upward move. That is why trend breakouts often reveal themselves with strong and sharp rises. Of course, not every breakout is followed by a strong rise. Sometimes the price only briefly moves above the trend line but falls back because there isn't enough buying power behind it. This is called a false breakout. That is why for a real move to begin, the price not only has to break the trend, but also maintain itself above the broken level. If the price pulls back but finds support at the broken trend line and then turns upward again, that is when it becomes clear the trend has truly changed. Once this confirmation is received, investors start acting more boldly, and the price's rise accelerates. Breaking a downtrend usually happens in two phases. In the first phase, the price jumps upward quickly. This is the initial reaction to the breakout. In the second phase, the price pulls back to test the broken trend line. If after this test the price rises again, then the trend change is confirmed. Investors closely follow the signals from the chart during this process, because the difference between the start of a real move and a false breakout becomes clear here. In the market, the phrase, "a move begins," actually describes not only the price starting to rise, but also a transformation in investor psychology. During downtrends, investors are often filled with fear, panic, and distrust. But the moment the trend is broken, these feelings give way to hope, courage, and expectation. This psychological transformation is very important because the most fundamental factor that determines market price movements is investor behavior. Once people believe the price will not fall anymore, they put their cash into the market. This quickly drives the price upward. Historically, trend breakouts in many assets have created major turning points. For example, in stock markets, when long downtrends were broken, strong bull rallies usually followed.
Similar examples exist in the crypto markets. Bitcoin has broken long downtrends many times in the past, and each time, major rises followed. This teaches investors a lesson. Trend breakout should never be ignored, because the breaking of a line is not just a technical event, but also a shift in the market's state of mind. The move that begins after breaking a downtrend is often the sign of a new trend. If the price then starts forming higher highs and higher lows, this shows that an uptrend has begun. In other words, a trend breakout is actually a starting signal. The real uptrend, however, is confirmed when the price continues this structure. This process is very important for investors because those who catch the direction of the trend correctly can gain significantly. In conclusion, a downtrend represents the dominance of sellers in the market. But if one day the price breaks this trend line, the rules of the game change. The seller's power has weakened and buyers have stepped in. This breakout often creates a strong psychological effect that triggers a wave of buying. That is why if the price breaks the downtrend, a move begins, is accepted as an important rule in technical analysis. A move is not just the rise in price, but also a sign that the market has entered a new phase. But we can't decide on analysis based only on trends. Let's look at other metrics as well. Stay tuned.
The concept of a bullish order block is a highly important tool used to track the footprints of market makers and large players. When looking at a chart, the area where the price stayed sideways for a long time or made a small downward move before rising sharply is often considered a bullish order block. These areas are essentially where large buyers such as institutional investors or high capital players made their purchases. They usually do not buy large amounts all at once because that would immediately push the price up and sabotage their own goals. Instead, they keep the price in a certain area for a while and make their purchases in parts. Once the buying is completed, the price quickly moves upward. That leftover area, meaning the final sideways or downward candles before the rise, is called a bullish order block. The importance of these blocks comes from this. If the price returns to that area later on, market participants know it will serve as a strong support, because that was the area where big buyers stepped in and pushed the price up. Large players often like to open positions from the same areas, so when the price comes back there, strong buying may appear again. Investors know this, so they watch that area carefully. If the price pulls back to the bullish order block and then bounces upward, it shows that the market is continuing its upward movement in a healthy way. A bullish order block is essentially the market's memory. The price traded in that area for a long time, large volumes were exchanged, and then an upward breakout happened. This memory sticks in the minds of investors. When the area is retested on the chart, buyers act immediately because they see it as a safe ground. This belief exists not only among retail investors, but also among institutional investors. In particular, algorithmic trading systems automatically calculate these areas, and when the price reaches them, buy orders are triggered. In this way, bullish order blocks often create a self-sustaining cycle. A bullish order block beneath the price carries a critical signal in this respect, because even if the price experiences a decline, there is a strong support zone underneath. That means when the price reaches that point, the selling pressure breaks, buyers step in, and the price tends to bounce upward. For technical analysts, this is very important, because for a trend to continue healthily, it is normal for corrections to occur from time to time. But it is necessary to estimate how far these corrections may go. Bullish order blocks help with this prediction. If the price pulls back during a correction to the bullish order block, finds support there, and then rises again, it is strong evidence that the uptrend is continuing. This can be explained with a metaphor. The price is like a ball wanting to bounce upward. To throw a ball upward, you first need to hit it down. The stronger the ground, the higher the ball bounces. A bullish order block acts like that ground on the chart. When the price hits it, it finds solid support and bounces upward more strongly. If the ground were weak, meaning there was no buyer support, the ball would just stay where it hit, and the price could fall further. But with a bullish order block, the upward bounce of the price becomes much more likely. From a market psychology perspective, bullish order blocks are also very important. Many investors are aware of these zones and mark them on their charts. Therefore, when the price comes to that area, collective behavior occurs. People think a bounce is expected from here, so they buy. This collective belief really pushes the price upward. Sometimes not only technical reasons, but also investors collectively focusing on the same point cause the price to bounce. Certain conditions are required for bullish order blocks to be strong. First, the price must have risen sharply after the block. This shows that there were truly strong buys there. Second, as long as the block is not tested, it retains its value. If the price reaches the block once and bounces, the second test may be weaker. That is why the first test is usually the strongest. Third,
A crypto project's roadmap tweets are of great importance to investors because these types of posts show the project's future goals, vision, and efforts to comply with regulations. The roadmap shared by Zbcn is particularly noteworthy because one of the biggest challenges for projects is regulation. In the crypto world, many projects are technically advanced but fail to grow or operate officially due to regulatory barriers. This is exactly why Zbcn's tweet emphasizes how determined and disciplined the project is in complying with regulations. The first part of the tweet says, "Our compliance roadmap is moving right on schedule. SOC2 is complete." The term SOC2 refers to an important certification that covers information security and data protection standards. Especially for companies providing financial services, SOC2 is an audit report that proves user data is processed and stored securely. For a crypto project, having SOC2 certification increases trust in the eyes of both institutional investors and retail users. This certification shows that the company takes user data seriously and meets a certain standard in cybersecurity and privacy. Therefore, announcing the completion of SOC2 is a very important step that adds credibility to the project. The tweet then mentions European Union regulations. MiCA approval expected September. MiCA, or Markets in Crypto Assets Regulation, is the EU's most comprehensive legal framework created to regulate crypto markets. The purpose of MiCA is to bring all companies issuing crypto assets or providing related services under a common regulatory framework, and to ensure investor protection. If Zbcn actually manages to receive MiCA approval in September, it would mean the project can legally and securely enter the European market. This would not only earn the trust of European investors, but also put Zbcn several steps ahead of its competitors. Getting MiCA approval is a difficult process, and not every project succeeds. Therefore, obtaining this approval could also create positive expectations for the price. Next, the tweet states, "FCA progress, expected end of October." The FCA is the UK's financial regulatory body and is known worldwide for its strict rules. For a crypto project to become compliant with the FCA adds global credibility. The UK is moving toward becoming a major crypto hub, and gaining FCA approval would make the project a legal player there. Zbcn aiming to advance this process by the end of October shows how serious and clear its roadmap is. This step is also critical for institutional partnerships, since FCA-approved projects typically find it easier to collaborate with large financial institutions. Another important part of the tweet is ISO certification targeted by end of 2025. ISO certifications demonstrate compliance with international standards. These certificates prove that a company has achieved a certain standard in areas such as quality management, information security, and operational processes. For a crypto project, obtaining ISO certification means not only regulatory compliance, but also operational reliability. This certification reflects the project's long-term vision, since ISO processes are neither easy nor short-term. If Zbcn is truly targeting ISO certification by 2025, it shows that the project is acting with long-term sustainability in mind, not just short-term goals. At the end of the tweet it says, "With Gatenox leading, we're executing our compliance roadmap with precision and hitting regulatory milestones right on schedule." Here, a partner or leading institution called Gatenox is mentioned. This shows that the project is receiving professional support in its regulatory processes and is not leaving things to chance. Many projects in the crypto space face problems or even bans because they ignore regulations. But Zbcn is taking a completely different path with this approach. It is proceeding step by step under professional guidance to implement its roadmap. The phrase "right on schedule" is also noteworthy because it shows that the project is progressing without deviating from its planned timeline, instilling confidence in investors and demonstrating its disciplined approach. From an investor psychology perspective, this tweet has a very strong impact. In the crypto markets, investors usually focus on two things: technology and regulation. Technology shows how innovative a project is, while regulation shows how sustainable it is. Complying with regulations is a difficult process, but necessary since many countries are strictly supervising crypto projects today.
If a project achieves regulatory compliance, it becomes safer in the long run and attracts institutional investors. This is why Zbcn's roadmap tweet creates an effect that strengthens investor confidence. From a price perspective, these types of announcements generally create positive expectations. Investors think this project is not only developing technology, but also complying with the rules set by governments and institutions. That means it has a high chance of surviving long term. This thought increases investor confidence and draws more people to the project. Clearly stating key regulatory steps like MiCA and FCA on the timeline creates expectations for the price. These expectations often increase buying first as investors want to position themselves before the approvals. But once the approvals are officially granted, price movements may become highly volatile, because some investors may also want to take profits. The long-term vision in the tweet is also noteworthy. The ISO certification is targeted for 2025. This shows that Zbcn is not only planning for the coming months, but also for the years ahead. While many crypto projects focus only on short-term goals, Zbcn's long-term vision is a sign of serious institutionalization. This vision makes the project appear more reliable in the eyes of investors because projects with long-term planning generally have a lower probability of failure. In conclusion, Zbcn's roadmap tweet creates a strong impact both technically and psychologically. By completing SOC2 certification, it has proven its security standard. By scheduling critical regulatory steps like MiCA and FCA, it has paved the way for entering the European and UK markets. By targeting ISO certification, it has shown its long-term vision, and it has emphasized that it is carrying all this out with professional guidance. This approach shows that the project is not just chasing short-term hype, but is instead following a serious and disciplined path. For investors, this creates strong trust in the project. This trust may create expectations for the price, and as regulatory steps are completed, volatility may occur. However, looking at the overall picture, as long as Zbcn's roadmap continues on track, it provides a positive foundation for the price.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.